Hi, this is Brian Neal with TradeToBeFree.com, and want to give you an update on one of the top growth stocks this year and how it's reacting to a bearish candlestick pattern here and where our next entry point is that we're looking for on this. Remember last time we had this in a YouTube video. At the time it was breaking out after a really good earnings report. We had that video on YouTube actually as well, and made a real nice move out of an earnings eruption trade. It ticked all the boxes in that strategy, so all the criteria was met, and it made a really big move here within a few days. And then later we talked about, in a separate video, we talked about the earnings flag was setting up really nicely on this, and we can see here the stock reached the entry point, held a very tight stop loss through here, and made another really big move. Another $4.50 out of the earnings flag. So that's, more than 20% out of the earnings flag. And then it got to about 175. And then at that point, ISM Services Index came out, and that was expected to be weak. And instead it was really strong. And that caused rotation out of these secular growth stocks like Roku and some other stocks. I'll show you another one here in a minute. But a lot of these secular growth stocks were sold off to put money into cyclical stocks as the economy was better than expected. Most of the economy in the U.S., the vast majority of the economy, is in the services sector, and that part of the economy was growing very quickly. In August, actually, came in really strong. So that caused a lot of fund managers, a lot of money to rotate out of secular growers into more cyclical stocks, because the secular growers are going to do better in a low interest rate and low growth environment with low inflation and sort of that interest rates trending lower and inflation being really low for a long period of time with low growth. And so money was sort of hiding in that area of the market for a long time, especially since it was less politically sensitive than other areas of the market as well. And so when that services index came out really strong, that kind of triggered a lot of the money to move out of bonds and also to move out of these secular growers into more cyclical stocks. One of the key technical exit points that you could have seen on a chart here was a strong bearish engulfing candle. So if you look at this day here where the stock opened up, above, I think, above 170 looks like, went up to 176.55 and then came down hard and closed below the low of the prior, or the body of the candle anyways, of the prior 3 days trading activity. Okay, so that's a large bearish engulfing candle. And usually with a bearish engulfing candle, I'm not going to be too concerned about a bearish engulfing candle for a longer term swing trade. If it's a very large candle like this, though, that'll get my attention. And when you see a 10% during the day, that kind of sudden move lower and a bearish engulfing candle at the same time, that to me is a clear exit signal to get out of that trade. Okay, so if you're holding on to this and you're trying to play for the longer swing trade and you want to let it ride, that's often a good point to get out. Now this may rebound here off this 20 EMA and come back and test the highs. You can see back earlier this year, Roku tended to, sell off like that and then come back, do maybe a 2/3 retracement, around a 2/3 retracement of that, move lower before coming back and moving below the prior low on that first move lower. So we're looking at probably an ABC down pattern, and how much this rebounds is a very open question. This could be just a bear flag here, and we could be heading down to the 50-day moving average to test that soon. Okay, and that, if we get a strong bullish candlestick pattern off of that heading into earnings, that could be another good entry point. If the market continues to trend higher and if it doesn't turn over hard in the days or weeks ahead beforehand. So if the market environment is still good enough, I'll be looking for that bounce off that 50-day moving average and perhaps off this low in the prior consolidation, or perhaps this longer consolidation here, bounce off that, maybe get below the 50-day moving average a little bit, and then maybe we have a 1, 2, 3 trend change, or maybe we have a double bottom pattern here, okay, or just a really strong bullish candlestick pattern off of that. We had that over here in late June. We've featured that or talked about that in the daily alert and said that was another good entry point off this 50-day moving average. And that was right before about a 15-20% move higher for the stock within a couple weeks. So we might see that same kind of setup here in the days or weeks ahead, and we just have to wait to see how it sets up. Okay, so that's Roku. Roku is, off that initial entry point, that made about a 50% move higher within a month. Okay, so these top growth stocks, when they have these big earnings beats and guidance raises out of these narrow consolidations, if they act well pre-market and if they sort of tick all the boxes off on the earnings eruptions strategy, they often continue on higher for a number of weeks afterwards, and these tend to make some of the biggest moves in the market in the weeks ahead. So definitely want to keep those on your radar. So, okay, another stock here I want to talk about is MDC Holdings. Now, a lot of money is going into the housing stocks right now. Okay, these are offering good valuations right now. The P ratio on MDC, I think, is down to below 10, or was down below 10. And now it's probably still around 10, given that their numbers they came out with, I think on Thursday night or Friday morning, were much stronger than expected. They had some monthly numbers that were very good, okay? And you can see, again, the stock had that bullish inverted J pattern. It had a nice symmetrical triangle pattern here, a lot of good formations, technical formations, okay? And then once it closed above the top trend line, okay, that was the target entry point, and we can see it made the final target here within 2-3 weeks. And again, these are stocks with rising estimates, a good valuation, and in an area of the market that's doing really well right now. Okay, so that's another good trade there. And you could have, taken some off in the 4 to 10% range, stopped it a little bit below the entry point, the rest of it, and then gone for that final target. And we got that on Friday. Actually, I took some off here in the 43, 44 range using some of my day trading skills to try and top tick this and try to get as much as I could out of a part of my position. Okay, we'll keep the rest until we see a strong sign of this starting to trend lower. So, okay, so that's the good news. Of course, there's also the bad news with any market, and MDB. This is one of the top growth stocks in the market right now, one of these secular growers that is not so dependent on the economy because they service a part of the economy and industry where, there's cost savings, with cloud software and cloud databases that service that cloud software and those cloud companies. So this will tend to grow strongly in the years ahead, as long as the cloud continues to do well, and all the experts are saying that's going to be the case. So these secular growers are less impacted by a slowing global economy, less impacted by trade and political risk. Okay, so this is a really good setup here. Okay, and what we said was to go ahead and look for a break of the pre-market high or 158.50, whichever is higher, okay, as the entry point. Okay, so we wanted to wait until that point before jumping in on the trade. All right, and then if you look at this chart here, it doesn't show it, but the pre-market high on the day of the earnings, we said to wait till after earnings. We want to see that big earnings report, a positive earnings report, and then after that, we want to see a break that pre-market high after the earnings report. Okay, and what you can do is just go to your online broker and turn that on, that pre-market activity on in your online broker, or with Yahoo Finance. That's free. There's a way to turn that on, okay, that pre-market activity, and you can easily see that pre-market high. And the entry point was a move above there, which is the case here because that's above the 158.50. So he said either the pre-market high after earnings or above 158.50, whichever is higher. Okay, so we waited for that. It never reached that pre-market high, never broke that. And so we avoided that trade. And that's a key swing point, key resistance level that we want to look for to see if this really is going to trend higher or not. If it can't break that, then we know it's not a really strong reaction from investors to that news. Okay, so it may look good, But when you have this rotation out of these secular growers into cyclical stocks, if fund managers finally decide to, make that shift, all right, then it may be a point to sell rather than to buy. Okay, so we want to see if it's going to breach that swing point and move higher, and it didn't do that. So that was the key test to see if it was going to do that for us, and it didn't make it there. Didn't even reach there. The pre-market high was up at 165, 167, which would have been real nice if we could have broken that, because that's also a double bottom pattern here. That's the if you bring up a weekly chart, this is the entry point, a break above here in a large double bottom pattern on a weekly chart, and that would have been real nice if it could have broken that, but it didn't reach the entry point, so we avoided that trade, and we avoided a loss in the process. So that's why we want to wait until a stock breaches that key swing point when it's setting up like that. Okay. Now on the downside, we also had Coupa software, okay, that had a really nice pattern here. This is a real nice earnings flag developing. Okay, it was on a Friday, so Fridays usually have a little lower win rate on most trading strategies, and we wanted to see Coupa break above the highs here out of this earnings flag. Looked really good, but again, when you have that sell-off starting in an industry like that, sometimes it'll happen just at the wrong time. And so as this is breaking out of the earnings flag, it got hit and pulled back right away and hit the stop loss point the next day, and we were out of that trade right away with the, I think, 8 or 9% loss on that trade. So that's an example of a losing trade, and one where, you want to adhere to your stop loss discipline, and, this could be a head and shoulders pattern here, and we could drop, another 25 points here to the downside, so we got to watch out for that as that rotation continues. And if you look at all the top growth stocks in the market, they all got hit a little bit later for Roku, but Okta and Twilio, Okta is one of the top growth stocks in the market right now. Another one of these secular growers, not so dependent on the economy to do real well, to grow their earnings and sales in the future. Okay, and that got hit really hard here. This is down 30-some% within a few weeks, and I think Trade Desk got hit too. And yeah, I got hit. Looks like it wants to go lower. And there's other ones too. Like, most of the top growth stocks in the market, young growth stocks in the market, were hit pretty hard. So that's why we want to have a stop loss in place. In fact, you could have a 4 or 5% stop loss on with a catalyst like that. That often works well too. You'll have a little bit lower win rate, but again, a tighter stop loss on it too. So right now we're looking at 2 or 3 other stocks that are setting up nicely. They're breaking out of consolidations. Okay, right now we're just ahead of the Fed decision on Wednesday. All right, and those 2 days before the Fed decision, you often get a pullback. And what's really effective often ahead of the Fed is to look for a good, a good consolidation pattern, a stock reaching the technical entry point in that consolidation pattern. Okay, so it's already broken a key resistance level. It might be a downtrend resistance. It might be a key swing point, like a prior high, let's say, a higher low and then a higher high. So it's breaking the prior high to trigger an entry. Okay, if that happens just before the Fed, what you can do is wait for a pullback on Monday or Tuesday or even Wednesday morning ahead of the Fed, because before the Fed meeting, you'll often get some, withholding behavior, so to speak, for fund managers to wait to see what the Fed's going to do before they start adding to or putting on more of their position, okay, ahead of that key decision. Because if they come out and surprise, have a negative surprise, do something that they're not expecting, that causes the market to come down, then they don't want to, go ahead and jump in with everything right before that decision. So they'll oftentimes wait until after that decision to add more to a position or to start a position. So what you can do is wait for a good entry point on a swing trade and wait for that first pullback. And then after that, after the price pulls back, or if it does pull back, wait for the price to close above a prior day's high, or just take advantage of that pullback and buy during that pullback ahead of the Fed, because you normally get some weakness ahead of the Fed. In fact, most breakouts will do poorly ahead of the Fed. And most day traders and swing traders will point out that those 2 or 3 days ahead of the Fed meeting are often some of the worst times to day trade and swing trade, to enter a position, because you often get that weakness, similar to a Friday, maybe a little worse than that ahead of the Fed. But you can take advantage of that weakness also to get a good price on your favorite swing trade as the market pulls back, or as those top growth stocks and stocks that are in those strong trends, as they pull back, you can capture that weakness and get a better entry point on your swing trade. But just on those that have already reached a good technical entry point out of the consolidation. Okay, and we've got more videos on the site and also on our YouTube channel that goes over the different consolidation patterns we look for, from a double bottom pattern to a flat base breakout, bullish inverted J pattern, and there's many other ones out there too. So once we get that good entry point on a daily chart, then we can wait for that first pullback right ahead of the Fed, right before the Fed meeting, and take advantage of that. So, okay, that's about it for now, guys. And good luck in your trading this week. And if you have any more questions, you can ask them in the comments below, or you can email us at info@TradeToBeFree.com.